Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's recap. It is Wednesday, the last day of the quarter. And it's been a pretty horrendous quarter if you are a buy only, or a long only or a mutual fund. But you've had a pretty sick, 5-6 year, move since the 2009 lows. I think this quarter is being deemed as the worst since, 2008 or 2011, depending where you look. I think we were down 7% for the quarter. As a trader, though, I think a lot of people did very well because technically there were a lot of signals on how to reduce risk, how to get short, how to take advantage of the volatility. So, for the first part of the year when the market was doing nothing and everyone was all happy and we were supposed to be up 7 to 10% on top of 6 years worth of gains, it was a little harder as a trader. And recently the volatility made the movement change, which helps us as traders because when markets get crushed, you can then play a bounce because you're out of the way and figure out and measure the move, and you could also find where the relative strength is and find the stocks that act the best during some kind of oversold bounce. And then when markets have that oversold bounce, you get to see what's not bouncing, where the relative weakness is, so when we hit resistance and turn down, that's the next group to short or the next problem spot. But anyway, so today we came in, the futures were up like 22 handles. I was with Amelia, and she's like, what do you think? I'm like, well, to be honest, I think that with the end of the quarter and maybe some new money tomorrow, a lot of people like when I do, Red Dog's gun to head call, which I've made a lot of them, just to give a feel of what I think. I was like, I think we see spiders 192 to 192.5 versus retesting the Red Dog reversal from yesterday. Just because I think, yesterday it was too easy for them to sell it and it reversed. And I know today the action was kind of tricky. They got into the gap, but they held the majority of it. And then we closed pretty well, and it seems as if that was the right short-term call. Not saying we're out of the woods, not saying we're going back to the highs, not saying we're in a bull market. I'm saying for a trade, you could have made money if you bought the dip today, played some strong stocks, and maybe you get a little follow through over the next day or so. So anyway, let's see where we are. You go to the chart of the SPX, and here is this lower range. First things first, everyone was trying to figure out, would this be a V bottom? Okay, a V bottom after breaking this upper channel. Okay, and basically once we got back up to resistance, we talked about it's either going to be a V or a W. Okay, here you had a quick higher low before coming back up and getting this topping tail when the Fed didn't raise rates. So this was a potential spot to get short after maneuvering this range. And now, lo and behold, this could potentially, that's a key word, could be the W. What's a W? You have basically two V's, right, that connect together and make a W-type pattern, which is like a double bottom. But then at some point, in order to get going, you got to clear this spot. So what do we know now? We know yesterday there was a small Red Dog reversal, which was hard to see because it happened in the last 15 minutes of the day. But ultimately, we went to 1879, okay, that prior day. And then yesterday we went to 1871, which is only three handles away from that low. So remember ABC tweet that I talked about? I said we're either going to stop right before it because everyone's waiting for it, or we're going to go below it, squeeze everyone out, then come back above it. Well, it stopped before it, closed okay, and then today, cleared this somewhat first resistance zone and entering perhaps the second. Okay, if you want to attach lower highs, this was one lower high. This was on Friday. So if the bears want to keep some kind of control here, perhaps they sell this off into the 1924 area, or maybe a small push a little bit more even to this 1952. But ultimately, the makings of a W. If we stall here and make another lower high and then head back down, chances are this double bottom could get broken, and then we'll figure out what's next. But for right now, closed on the highs. You go to the chart of the spiders, and you'll see that first time, we basically had a gap that held. Okay, they came in, somewhat held yesterday's prior high, and we could trade versus this, and the high today was 190, 182, pretty close to my target, and then we'll see, again, like I said before, can we get back towards the 21-day, because the 21-day has been, some decent resistance. So there is some room. So if you just said, I'm shorting the first day up, you might have to take some pain. If you bought today, which I have a few longs on, let's hope that we get a little bit of follow through tomorrow. We shall see. So as of right now, so far decent. IBB, real quickly, wasn't able to take out this pivot. I'm just going to go right, I'm not going to talk about the past, I'm just going to talk about where we are. Here is your double bottom in the IBB. Here is a small pivot that perhaps it gets through and gets to this spot in my chat on Redler All Access. I was like, I don't know, somewhere around here. So I think we see, 312, 313 before we see a move back to here if we go back to there. So you might be in some IBBs. That's resistance. Your next spot, we'll see if we open up there or open up, a little lower, and then it can trade through there. But, that's just tactical. So far, we'll see what happens here. A little lower range, nothing so great. Here's, if you sold when you had this ascending channel here on the Clinton talk, maybe you're long a little bit here versus if you have a risk tolerance. What the Qs do? Qs, not that compelling or not that big of a move, but from where we were on the 824 lows, it did hold in better relative strength-wise. So we'll see, what happens here into a boatload of resistance. Here is your topping tail there, and here is your lower high. So we'll see if, what happens into here, if this kind of controls the move back in the Qs. Let's just get into some stocks now. All right, Apple definitely acting a little weaker. Not sure exactly why. In a stronger tape, you would have expected it to be stronger, but ever since this small reversal last Friday, then it broke this upper support, which we talked about, actually made some money short there. Today, you had an inside day. So we'll see what happens in here. If this stock can't get back above 112 in the near future, 112.44, chances are you might get another short setup below this low here, and then that probably wouldn't be good for the overall market, even though the market did hold up with Apple being weaker today. Some people are talking about, okay, which, let's go to the weekly chart because you can see it somewhat, which wouldn't be good for the market, a head and shoulders top on the weekly. Here's your left shoulder, here's your big head, here is your right shoulder. If you take out, that flash crash low, this would be your neckline, okay? And then if that's the case, you go 135 down to, this 104-ish area. That's what, 26 points, and that would give you at least a move. Wow, that would give you a move all the way down to, around here, which, or into the 200 days. So that's, that might happen. Sometimes I look at patterns and I'm like, really? You think that's going to happen? And all of a sudden, months from now, it happens. This trend was broken. This channel was also broken with an outside day right there. Remember that one on earnings? And now, you have a bit of a topping pattern building. Last time it did one of those was right around here, if you remember. Okay, looks a little different, but that was basically, this pattern here before it broke and, came all the way in. And at that point, no one believed it either. But you are seeing the active trend broken, the upper channel broken. And now we're in this right side area where in order to get below this, that 105 has to give way. At this point, the jury's out. If it holds here and then makes a descending little channel and goes above it, then all of a sudden, it continues. That's why necklines are very important because necklines serve as big support. If you look at the upper, real quickly, the upper head and shoulders pattern here, you had two of them. You had one right here that got filled to the downside, and then you go to the daily and you'll see that, it was a little bit more micro versus macro, and that was right here. That was your left shoulder, your head, your right shoulder with a potent, move down here, if you remember that. And then this is when it broke below the neckline. So these are distribution patterns. And then look how symmetrical. Came down, retested right back here. And now let's take a look at it this way. I would think that maybe there's a little bit more room to bounce before sellers just want to sell it down again. But we shall see. And let's go into some other stocks. Netflix. I am long this overnight. I'm definitely, not thinking, I don't say I'm concerned, but you have this little channel here. If we're going to rally a little bit and they want to have some kind of leader, this acts somewhat better than other names, and it acted better today compared to other names. So, and it's a little thicker, so I feel more comfortable owning something like that if I wanted some exposure overnight than something like Amazon, that is just very thin and wide, and if you're wrong, you lose money fast. This one had a little bit of a bounce. I guess we'll see if it can get back to here before sellers come in. Same thing goes for Google. A little bounce. So basically, we're not looking for much. We're looking for these lower pivots to get broken and then see if they can come a little bit further. So we're actually trying to make quarters and dollars in front of what could be a steamroller if we head back down, but that's what we do. We have to trade every day unless you're just going to sit and do nothing and really wait. But there's opportunity there if you're quick. And right now, you have like this descending channel here where there is more room to go if it wants to kind of bounce back up and you want to play it. Facebook also very similar. It got its sell signal on Friday, which was right back here. You had a one-up day. Now the question is, can it push through this little pivot and give you a move to here before a boatload of resistance comes in? So there's not much room there if it's just going to be a bounce. But if you start shorting it here, sometimes when it gets into this area, it looks really good. You don't hold it, so you could get squeezed out. So at this point, first up day after 3 big down ones, I think wait a little bit before you just start laying it out. And if you happen to be long it today because it closed well, I think that's a higher probability trade for tomorrow, but we shall see. Twitter got the the old CEO back, et cetera, et cetera. I guess people liked it at first, first time hearing it. We'll see what's next. Still not really compelling coming into this area. That's resistance. If you caught it quickly today, I was out of the office when it happened. Maybe you made some money. As far as FIT, I think FIT, I'm long a little bit overnight, did turn up. It's a newer stock, and it seems like it has some decent institutional interest. It already went above this 2-day pivot, so I'm thinking maybe there's more room here. So if something had to build, this one can. So I have this. So I took a little spiders. I took a little fit and a little NFLX. I probably could have taken a lot of things because a lot of things look similar, but I took those because I wanted a little exposure overnight just in case we have follow-through. I know the last 2 nights the futures are up, so chances are the futures will be down small, and we'll have to figure out the trade, but we'll see. I do still think there's some more room before sellers come back, and that's why if you go to my chart that I put on from 845, if you said, my gut says we see 192, 192.5 before we see that red dog reversal low like yesterday, maybe it paved the way for a good trade for you, today into tomorrow or the following day. So the banks, really not much going on here. Little small red bar. This has been broken, but does have a tiny bit more room. What did the USOs do? They tried to hit it first, and then they really couldn't get it on that, that big inventory. Still very, very tight. Okay, very, very tight. It looked like it was ready to go if they had a friendly number today, but they didn't. But they still, again, didn't break it down. So it's tight, and it seems like it might want to go a little bit to the upside. Chevron, look at this. This stock looks just like this, and gave you a little move today. People are like, oh, what do you think of Chevron, Red Dog? I'm like, a lot of names came all the way back to the lows of August. This has been broken, has a lot to prove, but went sideways, looks fair. If you're in it, first day up out of it, maybe gets a little bit of traction, for a trade, not for a new trend, not for a blockbuster new high move. It's below every moving average, but looks decent. XLE probably looks the same. Not really. XLE made a low, just like everything else, and a tiny bit of a higher low. Green day today. Question is, will it stop here or will it try and get to there? I feel like we're trading for the birds here. I wish there was better patterns and better things to gauge pivots and trades off of, but this is what it is. Day one of a bounce off of very oversold levels. End of the quarter window dressing, which were a little broken windows. And tomorrow, if they want to bait some new money to come in, maybe they open it up to give them, a little bit of a kick in the butt to get involved. They might miss something, and if that happens, then if you have some longs from today, you get paid. If they open it down tomorrow, because today was just full-fledged, shadery, if that's a word, shadery word, or is just controlled because they want people to read a little bit of a better statement. Instead of down 8.5% for the quarter, they're only down 7%. So they don't get yelled at by their clients or fund manager or whoever it is. There's a lot of shenanigans. Shenanigans is the word. If today was just a bunch of shenanigans, then tomorrow we open up down, and anyone who took any longs is probably upset because it took all day to work into those longs because the market action today was very volatile. But nothing you could do about that. If you went out flat, that's fine too. There's been enough intraday action where you can make money on both sides of it. What else happened today? What gold do today? Oh, we talk about Allen tops. This was your Allen top here. When this happened on this day, I was like, oh, this is horrendous. It's going to be potentially another Allen top where all these people are trapped. And now look where gold is. Just been in a bad trade, still below the 200-day. Not much to do there. What other names are going? What else is going on out there as far as names? And I heard something about Microsoft. What does Microsoft look like? inside channel has a little bit of room. What did Disney do today? Disney. You know what? Disney, with all said and done, did not make it all the way back down to the August lows. Held higher, gave you a red dog reversal yesterday if you were looking for that in trading, and then a little gap up today. So not so bad. Has some room to the 200-day. What did Starbucks do? Starbucks, got scared with, at new highs as the market got sold off, held here. Not really that of a compelling pattern. I know Under Armour got beat up also. Not much of a pattern there. You had this false breakout here, a little signal there, and then it broke below this, and now it's just like an inside day. Not much to go on there. It's going to take a lot of time. A lot of time for these charts to rebuild. A lot of time, for the accumulation to get things in a better position to get you a multi-day move besides maybe a 1 to 1.5 move or a 1 to 3 day move. And the market's going to take a lot of time to prove that it's just more than a bounce and that doesn't need to just be reshorted. Uncle Carl today was talking about how the market could get crushed, and who knows, maybe it does go down another 5-7%. But if you're a macro investor, don't get scared. If you're my age or 10 years older, keep putting your monthly flows in. That's how you'll get a good average cost. My son's 7. I have a 529 plan. I welcome lower prices. It'll give me a good average cost. Hopefully by the time he's 17, we're back at highs and pays for school. If you're in a 401k, same type of thing. My wife started investing in her 401k in 2006. She didn't stop when the market crashed. She kept going through it. And now she, average-wise up 7-8% since then every single year because she stayed the course. So that's different. If you're trading actively for cash flow and for P&L and this is your business, then no, we're below every moving average. Risk should not be crazy for you, but you could use your red dog reversal tactical longs, and then you could measure resistance 1, 2, and 3 to see where maybe we get the H cell set up, etc., etc. And until things change, that's all we have to go with. Have a great night. I'll see you tomorrow.